Good afternoon, everyone. Welcome to our virtual Lunch and Learn. I want to thank you all for joining us this morning and remind you that this call is being recorded. My name is Katie Worthington Decker. I'm the President and CEO of the Greater Winter Haven Chamber of Commerce, and it is our pleasure once again to have Rachel Comella with Certipay on the call today. The Employee Retention Tax Credit is something that has been available but was not widely used. And I wanted to make sure that our members in the business community knew that this was something that they could take advantage of. So we are going to have a brief session on this today. Of course, your chat window is active, so you can drop questions into the chat, and I'll be sure and monitor that. So as Rachel is going along, if you have any questions, we can ask those along the way. Right now, you are all muted. Your video may or may not be turned on, but you should be able to control that on your own. But if you do feel like unmuting and asking a question, you can do that as well. So again, I want to thank Rachel for joining us once again, as she has so faithfully through this entire pandemic crisis. And so Rachel, I'm going to hand it over to you.
Great. Thanks so much, Katie. It is so exciting to once again be here with you. We love the Winter Haven Chamber, and Kim Harris is also on the line with us from Certipay, and she's your go-to Certipay connection. So you've got her right in your back pocket for everything you need. The Employee Retention Credit is such a great topic, and when the stimulus bill changed at the end of December, it meant a lot of possible dollars for a lot of business owners. So when we talk about this today, we're going to talk about that new stimulus bill. And what happened, there was in the original CARES Act, there was a statement that if you received the PPP loan, you could not receive the Employee Retention Credit. So that was one of the biggest changes in that December 27th bill. So not only did it extend the Employee Retention Credit into the first 2 quarters of this year, 2021, but it also made a few changes to the 2020 bill, and we'll talk about that in detail. This is a tax credit based on wages that you paid to your employees. So when there are qualified employers, qualified wages, and then tax credits based on those, and we'll talk about those details, and then how you get the credits. And finally, like I said, it's extended through the first 2 quarters of the year. So the way they structured it is an actual reset. So in 2020, the totals were just one bundle, one tax credit amount. And the way they did it for 2021 is per quarter. So that's what we're going to be covering. And again, please use the chat box if you have questions, and we'll cover all your questions as we go through, or at the end, whatever makes sense. Katie's in charge of that. Okay, so when I talk about the qualified employer, here's what we're talking about. The threshold for 2021 is 500 employees total or less, and that's adding up shared ownership. So at least 50% ownership. So adding all the employees at all of your locations together, 500 or less, that would be a qualified employer. And that was a little bit of a change from 2020. It was under 500, but also there was a differentiator at the 100 mark. We'll talk about that in just a second. But for now, for 2021, 500 or less, you could potentially be a qualified employer. Now, the next step, if you meet that first threshold, is either a decline in revenue or having a full or partial shutdown or suspension due to COVID. So you've got the first piece is a must, and then the second piece is one of the two. Or, I mean, you might even have both, so then you'd be qualified. But that 20% decline in revenue number, and that is based on gross receipts. So all the money that came in the quarter, you want to compare that against the same quarter. So we're in first quarter this year. You would compare against the first quarter in 2019, not in 2020, because, you know, in 2020, we started to see some real problems. So it didn't make sense to compare to that one. So for 2021, you're comparing to 2019. And that 20% decline number, And that includes nonprofits. So if you're a nonprofit organization, you would look at all of your gross receipts, including donations. So in a nonprofit, it's all of the money that comes in from all sources counts as your gross receipts. And that's what you're comparing against 2019. And then the operations, so either fully or partially suspended due to COVID. So if you were, let's say, a restaurant and you were limited on the amount of clients or the amount of customers at a particular time or at in your restaurant capacity, then you would be partially suspended due to COVID. And let's say even something as like a secondary partial suspension result, like a particular supplier of yours may be fully or partially suspended, and as a result, you were not able to acquire a major component for you to function as a business. This would qualify you as being partially suspended due to COVID because you would not be able to get certain materials or certain kinds of deliveries and whatnot. So if that happens, that could be a qualifier as well. And another piece is if you do qualify for the first quarter, you automatically qualify for the second quarter. And the reason is, and the language is tricky because what they said is you will remain qualified up to the end of the month following the month where your revenue goes back over that 20% mark. So if you actually were qualified in the fourth quarter of 2020, you would automatically be qualified in the first quarter of 2021. And so you have to kind of be careful. If you think, well, I'm not sure if I qualify this month, take a look at, or this quarter, take a look at last quarter, and then compare your fourth quarter 2020 to the fourth quarter of 2019. If you would have qualified in that based on the decline or the suspension, then you automatically will qualify in this first quarter of 2021. And then you would have to just revisit for second quarter, what did your first quarter look like? And if you just say, this quarter I qualified, sales were below that 20% threshold. If next quarter they're below as well, you don't need to really do too much jockeying for which quarter did I qualify if it's the current quarter. Does that make sense? Are we good? Good, thumbs up, yes. Okay, so that's who. Now what is it? So for 2021, it is up to a $7,000 credit per employee. And so how do we get to that number? Well, it's based on wages paid to the employees up to that 10,000 number, and then the credit is 70%. That's up from 50%. We're going to go over 2021 in just a minute, but or over 2020 in just a minute. But for 2021, the formula is 70% of those first 10,000 in qualified wages as the credit. So what is a qualified wage? Well, you have to carve out any wages where you got other stimulus dollars, or if you used other dollars for those. So let's say you extended the FFCRA paid leave and you had somebody who went on paid leave, those particular wages you carve out of your qualified wage number. And you just use wages that you paid for these employees while you were at this reduced level. And same thing with loan dollars. Let's say you got PPP loan dollars this year. You participated either for the first time or second round loan dollars. Then you use wages before you received your loan disbursement or after the wage limit for where you used PPP loan dollars. So if you got a PPP loan this year and you didn't get your disbursement until March 1st, we'll take a look at January through the end of February as possible employee retention credit wage dollars. And then you can use up to that $10,000 number. And you can put things into that $10,000 number like healthcare amounts that you paid for an individual. So let's say maybe somebody only had $9,600 in qualified wages, but you paid an additional $400 in healthcare coverage. You can bundle that together and still get that full $7,000 in credit. But again, in the entire quarter, let's say you only paid somebody $6,000 in wages, then you would only get 70% credit of this $6,000 in wages. So that's what we're looking at. Now, the other thing that's great is this is per quarter. So you get that $7,000 per employee cap for first quarter. You can do it again in second quarter. If you are a qualified employer, you've got those qualified wages, you can claim those credits in the second quarter as well. Good? So how do you do it? So this credit is taken directly off your 941 or whatever your quarterly tax bill is. So talk to your accountants, talk to your CPAs, get help for this. There are a lot of third parties that help with processing as well. And typically they do take a small percentage, but if you're not sure if you qualify, you kind of look at like the DIY. Can I determine if I'm qualified? Can I determine which wages are qualified wages? Can I do all of these things, or do I need help with it? That's kind of how you decide, you know, who's going to help you with that. And get some help because it's a lot of money available for you. The IRS has even made it possible to claim credits ahead of time. So you can use that Form 7200 and make a projection of wages that you will pay in the quarter and submit that 7200 to get the credit ahead of time so that you can get the dollars back right away. Really a great way to go if you know if you've got all those qualified wages. Another place you might get some help. Ask your CPAs or accountants or your payroll firm, get some help with that because you may be able to get that right away. And another way that we are handling it frequently is simultaneously taking the credit in the payroll process. So if we know that they're qualified wages, it's a qualified employer, then we process the payroll and the wage credits against what would be due in the tax dollars. So there are some great ways to do things that can help you, you know, during these times, and that's really what this is about. This is a stimulus to help business owners stay in business and keep people working and, you know, get us all through these times. It's called the Employee Retention Credit for a reason. It's so that you can keep your employees, you can keep paying them, and you can keep your business functioning. So now, like I said, let's take a look back in 2020 because it is different. The rules that were in place under the original CARES Act for 2020 are still in place. So those minimum requirements and what was a qualifying employer and qualified wages for 2020, that's still in place. The difference is they were very strict about anyone who got the PPP loan could not take these credits. And so now with the new guidelines, you can go back and take the credits, but you cannot take it for the same dollars. And that's just kind of what I was saying before. Same thing for 2021. You can't overlap the dollars. So if you would have qualified in the first quarter and second quarter of 2020, and you didn't get a loan disbursement until, let's say, May or June, then go back and see, were you a qualified employer under the guidelines? Did you have qualified wages? You can go back and take a look. So for 2020, we were looking at the qualified employers were under that 500 mark, but like I mentioned, the threshold. So at the 100 mark, if you had 100 employees or less, and you were affected by COVID, which everybody was, then you could have claimed credits for whether your employees were working or not working. So you may have had some people in working. You could have claimed the employee retention credits on those wage dollars. If you were 101 employees or more, up to that 500 number, then you were paying wages for employees who were actually not at work and not performing services. So that is still intact for 2020 retention credit dollars. So that's what you want to take a look at, that threshold number there. Did you have more than 100 employees? So the credit would only apply if you paid employees who did not work. Now, if you were 100 or under, then they may have been working or not working. So you want to take a look at then the other pieces. So that's the headcount threshold. Now, were your gross receipts 50% compared to the same quarter in 2019, and with that full or partial suspension? So a little bit different. You had to be at that 50% threshold and look at your 100 employee count to see the difference. And I know, a lot of the people who we deal with are that smaller business owner under 100. So you may qualify for some of these credit dollars. And again, you can do that amended 941 to claim the credits. And it's the 941X. Check with your accountants, check with your CPAs, check with your payroll provider, or check with some third-party providers. We have a great partner there. If anybody's interested, just let me know. And they can claim for the refund on those tax dollars. And it's the same thing. Those tax dollars are available. They're out there. If you qualify, you get them. It's not like there's a limit on those. They're available if you qualify. So it's worth looking into if you think there's a chance you qualified for those, because those dollars are out there. And the dollar amount in, again, no double dipping. That's the biggest thing. Carve out FFCRA paid leave dollars that you might have paid. Carve out loan dollars where you would have claimed the loan forgiveness amount. And any other wages could be considered qualified wages there. So that's a big thing. And then the amount is that 50%. So for 2020, the wage credit is 50% up to that same 10,000 number, including if you made healthcare payments and whatnot. But the credit could be 50% of those wages. So a cap at 5,000 per person. And that spans all of 2020. So it's not per quarter, it's throughout the whole year. So let's say, for example, you had, you were a qualified employer, you had qualified wages at the beginning of the first quarter of 2020 and maybe into the second quarter, but then you got your PPP loan disbursement, and then that took you through half of the second quarter, all of the third quarter, and a couple weeks into the fourth quarter. And then you had qualified wages again at the end of the year. So you could do an amendment for fourth quarter 2020 based on qualified wages, and you could do an amendment for the first quarter. And it totals. So you take the qualified wages and add them up and make sure you don't exceed that 10,000 total wage number with the 5,000 credit. But that's out there, so don't be afraid to go get that and look for it. So, the final thoughts are, we've got it in place this year already. So pay attention and see if you qualify and notify your payroll provider right away so they can actively do the credits real time or get all of the information processed before 941s are due in April, and get ahead of the game. Also, take a look at 2020. There are a lot of wage dollars out there that you may be able to claim employee retention credits on. Be proactive with this, get in front of it, and see if you're a qualified employer. It might make a huge difference. It's a lot of money. And then the biggest thing is be very careful about that double dipping. Just carve out wages that might have been applied somewhere else, or if you use the leave dollars or other kinds of dollars for that. So no double dipping is a big one. But other than that, you've got some money available out there. Let's see if we can go find it.
Very good, Rachel. Thank you so much for going through that. I want to open it up. I didn't see any questions come into the chat box, and I know Rachel covered a lot in that time frame. So I want to open it up. If any of you have questions that you'd just like to unmute and ask at this time, feel free to do so. So I've got two screens, so you're seeing the side of my face because I'm looking at all of you on my other screen. But if you do have any questions, feel free to unmute. And then, like I said, this is being recorded. So I hopefully will have this up on our YouTube channel by the end of the day. I'll send it all out to you again. So if you need to watch it twice or 3 times to get everything, feel free to do so. Any additional questions? I don't see anything in the chat box. Juan says, thank you. Sharon, our first PPP deposited in April 2020. We qualified first quarter of 2020. So I'm not sure if that's
okay.
You want to look at that. Yeah.
Yeah. So Sharon, you would definitely qualify for employee retention credits for the first quarter. So that would be a place where you could do an amended 941X and claim those wage dollars. So, you know, provided you're definitely a qualified employer under the guidelines, then you take a look at those qualified wages from the first quarter. And so it doesn't, you know, I got a question on another webinar about what if you are qualified at the beginning of the quarter, but not at the end of the quarter. Well, it doesn't matter. If you qualify at any portion of the quarter, then the entire quarter becomes a qualified quarter. So you can use any wages in that quarter. So definitely go get some help. It sounds like you can get some credit dollars from first quarter of 2020.
Very good. Any other questions for Rachel while we've got her on the call? All right. Well, Rachel, thank you so much again for being open and accessible to us to be able to dissect this particular relief program, and to our friends at Certipay for, you know, being such a team player in this community. Actually, Certipay was just awarded the Business of the Month for the Winter Haven Chamber for everything that you guys have done for us and for the community over the last year. So we appreciate it, and we appreciate your support. Woo-hoo! As Kim Harris does.
Thank you. Yeah. Thank you so much. It's such an honor. We are happy to be a part of this organization, and we appreciate all of you.
Great. All right, guys. Thank you so much. And this will be up on YouTube shortly.